This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Well, hello, good morning, and welcome, everyone. It is Tuesday, October 21st, and this is the AgYield War Room. I, of course, am AgYield Marketing Manager, everyone's favorite backup host, and Brian's preferred companion for a tandem bicycle ride. If you have any questions or comments, please feel free to join the discussion. You can post a comment anywhere you see fit, and we're always answering your questions or comments at info@agyield.com. Speaking of Brian, let's go over with some overnight numbers.
Thanks, Jack. Good morning, everybody. D's corn overnight down a penny and a quarter at 422. Nova beans up a penny and 3/4 at 1033.5, and D Chicago wheat down 2 3/4 at 502. So let's see what the day brings.
Let's do that. Let's see what the day brings. Dustin, let's start with you. I know the government's still shut down, and that probably means no numbers and potentially more headline trade that we've been discussing for the past few days. So where's your head at?
I'd say, just market action. The market is still the best calculator of all the, market participants. And it has been acting pretty good. I can't really explain that. Yesterday you still had the private analysts, rolling out what they thought harvest pace was, and they had corn at 59% on average, which jives with what we would expect, usually just slightly above average pace with how dry it's been. I still think that the market is so accustomed to trading Iowa yields and Illinois yields that could maybe explain some of the support. And where it may be surprised is that we actually got really good yields in areas that we might not get as high of. We've heard anecdotally, at least South Dakota, really good yields out of the northern plains. So if combo that with the most acres since the 1930s, the market may be surprised to find there's plenty of supply still, even with, some lower yields in the best producing ground. Maybe we're in a bit of an echo chamber because the guys that we generally deal with are also the guys that put down a lot of fungicide and really invest in the crop. But I've heard some fairly decent yields anecdotally on our end. So.
Excellent. Thanks for that. Justin, let's shoot it over to you.
Yeah, I personally think the market's just stuck in this doesn't know what to do phase. The farmer, I would say that my opinion is the general consensus. It started in August that the crop's not out there and USDA was way too high, and therefore the market's undervalued. And I think that's the mentality. And spreads got super wide, and I think the farmer's storing as much as possible. And crop insurance is expiring. I think not to be a broken record here, but we've seen this happen before. I'm hopeful that we have a rally. Obviously, I'm hopeful that there's some great deal made, that there's some big positive development. That'd be great. My fear is still that the balance of open positions is going to be, shifting dramatically to a farmer long and there's going to be no coverage between now and March. Now, there's Farm Bill, there's all those things, but those are super hard. And even as detailed as we are, using our software and really trying to monitor it, it's still a really tough one to trade around, so to speak, or to balance your position around as a farmer. So I do think there's still, I'm most fearful, I guess, from now till the end of the year, as far as like downside risk. I'm, like I said, I'm hopeful that we have some, something positive happen here. Without a sharply lower yield, which I don't, to Dustin's point, maybe we're just the clients that we talk to are just, have above average yields compared to the rest of the country. But I sure haven't seen enough evidence to say that it's sharply lower than the government. I think there's enough evidence to say it's lower for sure. But to say like, some 160s or 170s type yield, low 170s, I don't think's in the cards. I guess if that is, then obviously we can go higher. But South America, I mean, look at South America's already over 50% planted on their first season corn crop in Brazil. So as we drag out here going in November 1st, it's like that window keeps getting smaller where we do most of the business. So I do think the safrinha crop, I think China buying, basically not buying any U.S. beans and buying a ton from Brazil has shifted most of their export market to beans, and we haven't seen that really pick up in safrinha yet. That is going to come, and I think it's going to come pretty soon because I do think Brazil's got kind of running out of beans, and you've seen China back away from what November, December bean purchases. So they're trying to take some government reserves to kind of bridge a gap to avoid buying U.S. beans until some kind of a resolution can be made. So I do think safrinha is going to pick up. I think there's a lot of risk in corn. If it doesn't go down from here, in my opinion, it's because it's just too low price relative to other assets, gold, other commodities, and there's just an underlying bid. I mean, that's a possibility too, which makes me more friendly to the back end of corn. If you look at spreads have really narrowed from December to July. Most of the spread narrowing has been in that range. And I think it's because this supply has been kept off the market and farmers decided to store all these things that we've talked about in the letter, excuse me, basis only contracts, DP, any way not to have to price corn right now, I think is being done. And maybe the last third of the crop is going to have a little bit more difficult time finding a home.
Yeah, and I would add to that too, Justin, because it's not like the market's cues are always correct. In 2023, for example, it was exactly this time. It was October 19th. And the same thing was happening. The market was rallying again. Spreads were narrowing. There was a perceived yield loss in Iowa because of the dryness that happened that year. So there's certainly some supportive like signs from the market. And if you took your cues from that, like that was actually a market mistake from market participants, in my opinion, because what happened is that was about the 50% harvest mark as well, same time of year, and it just was the sales were not coming yet. Ultimately, they came on the first notice days, the December 1st notice day, end of November. Anyone that's got access to the charts, go back and look at what happened November 29th that year. What happened at February 26th, 2024, same marketing year, and then what happened at the end of August 2024. All of those were basically signs that like the sale was basically the can was kicked down the road, and so there wasn't as high of a need, in my opinion, to raise cash that year. But again, here's a market that just didn't have its full market weight on it yet. Ultimately, that was the last time we had record production. If we're talking, I mean, we just use the USDA numbers. We're talking 1.3, 1.4 billion bushels more than we had in 2023. This is with Iowa at a 219 yield. I don't believe that Iowa is going to be a 219 yield. If I take 25 bushels off of both Iowa and Illinois, we're still talking 800 to a billion bushels more available supply than we had in 2023. And I keep using that year as a reference year because of this exact moment. It was a bad market cue. And it's not to say that it's just got to happen that way. We might be surprised, like you said, with much, much lower yields than we had predicted in all these other states too. But I just want to remind everyone that like there was a moment of confidence in that year that the yield wasn't out there, and ultimately there was a couple $100 an acre of losses for anyone that just stored and ignored into that spring and late summer timeframe.
Yeah. Yeah, and just to add, if you just look at too, just like market structure, and we talked a lot about this in July and August, about where the market had gotten down to a point where, every break the farmer was making more money than if it were to rally. And if you just traded off just that structure and not what you thought about crop size or anything else, it was the right move, right? And so we rebounded, and now we're into the time frame where crop insurance is basically 2/3 expired, and that balance has now shifted again for a majority of people where the downside would be the most risk. So if you just looked at just market structure of just that and just the time of year, I think that's really important. And just making sure that you're replacing that balance. And you've talked about this a lot, Dustin, but if you knew nothing else and just looked at a chart and just say when where are those levels and what should the market do, I think it's done a pretty good job. And I think we talked about this. I think we actually talked about this when crop insurance closed in end of March, and a lot of these people had these higher policies, and we kind of looked. I think 420 was the number that we kind of came up with as like the worst possible settlement point.
Yeah,
like 6 months earlier. And so, I keep trying to put that in the back of my mind of like, that's what the market's really good at doing. Just like options, really good at finding those big strike prices and settling there to make sure that nobody makes money on it. So the conspiracy theory part of me is like, that's the market's, the invisible hand's really good at finding those levels.
Yeah, and I would say too, because I think that's the first thing everyone thinks is like the market's good at that, but it also could be like the Ouija board of like everyone's doing something that's causing this to happen. Like, there was, I don't know, 4.5, 5 times as many ECO policies sold this year as there were the year before. So how many of those people in the back of their mind are not selling for the same reasons that we are, that they think they're covered with insurance? So that sale never really came to the market, which is what caused the market to find support, right? Like that could be the invisible hand of all of these things, just like option expiration, all the things that are happening behind the scenes. It's just a natural market force. It might not even be a malicious thing. It's just so many people.
I think that's just whenever that's the invisible hand, right? It's just when all participants come together and it's the collective, it just naturally finds that spot, and it can get above or below that, right? But if you just think about, I guess that was kind of my point.
Yeah.
If you think about that and like, okay, well now that once that happens though, 10 days from now, what does that look like?
Yeah. Well, I agree with you. I just want to make it clear because sometimes people say that like, oh, this is insurance companies trying to screw me, and I get that feeling because it feels that way a lot of times. But I think it's also, I just want to make that point more explicit.
Oh, right. Yeah, we are them.
Yeah.
Yeah.
Good stuff, guys. Anything? Well, actually, let's shoot it over to our guru of grain, our beast in the East, Ben Wiggington. See what he's got.
Just looking at charts, it's been June 9th was the last time we visited the 200-day moving average. We've done this, Justin mentioned it's really just been a range trade. Everyone is flying blind, right? We think in terms of ourselves, flying blind. End users are flying blind, farmers, speculative traders. And it's interesting to note that really, even though it seems really dead, volume's not been horrific. There's obviously a lot of automated trade in here, but I don't think anyone has a conviction to get Longhorn this time of the year on perceived yield loss or get willing to get short on really big yields. I think when we get to the reports, when we get all this data in, at some point when they dump it on us, I think we're every day we go further, we open ourselves up to a really, really big move, right? And whatever direction that may be. So it's an interesting time. I certainly have fears of a 2023 repeat. But then again, I look at all the other commodities with the exception of, crude oil's been pretty much a dog, but there's a lot of strength in commodities in general with grains lagging that. So we'll see. I think you go back and forth between Is this going to be kind of a little bit of a new norm with when you have good crops in both hemispheres? And right now, this is definitely probably not what the end user wanted for harvest. It's probably not quite what the grower wanted. Not enough yet. So we'll see if we can get enough automated trade in here to maybe tap that 200-day. But I certainly think that before first notice day in December, that would be a screaming good opportunity to get some coverage. So
thanks for that, Ben. Ryland, let's shoot it over to you for some livestock updates.
Yeah, so a little bit of recovery in the live cattle market, but overall just kind of an inside trade. Seemed like temperatures cooled a little bit just with some of the comments from the president about Argentina stating that we're going to buy some beef now. He said he wasn't talking about that much, but Argentina's a good country and a good ally. So overall, I think the market kind of cooled out a little bit, but if the overall end game is to lower beef prices, that's still going to be in the market. And there's still going to be a lot of concern, I think, going forward. But we did see beef prices up yesterday, despite all that. Choices up 241, select up 319. So we are seeing a little bit of stability here on the beef side, but overall, it just seems like you just didn't get that recovery bounce, I think, to a large degree that the market was really looking for. So we'll see if we start a little bit on the defensive today. And also on the hog side of things, actually saw open interest increase. So I think it's going to be seen as possibly a good sign, but we'll see what that leads to. It seems like cash market is still pretty weak here, and bellies dropped another $4.80 yesterday. So we just really haven't seen that kind of seasonal kind of bottom here yet on the cash and the pork side, which is typically what you'd see between now and maybe next week. So I think that's what the market's hoping for. We're pretty oversold, and just it's been a straight down kind of move. So hopefully we can see a little bit of support, especially just because we're discount to the index. Index is trading around 96, and right now futures are around, at least at this point, cash quotes are at 89. So I mean, you got this big discount on the December board. So we'll see if maybe that starts to hold some support between now and the end of next week.
Thanks for that, Ryland. Looks like we came into the open. Let's shoot it back to Brian with the opening numbers.
Yeah, no problem, Jack. Right now, D's corn 422 down $0.0125. No beans are unchanged now at 1031 3/4, and D Chicago wheat down 3 3/4 at 501.
Thanks for that, Brian. Well, that should do it for us here today. If you like watching the War Room and you want to help support the show, go ahead and give us a like or subscribe. Doesn't cost you anything to do so. Helps us out with the YouTube algorithms and gets the show out to a wider audience. So thanks again for everyone that tunes in on a daily basis. We're doing the show every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Thanks again for the thoughts and commentaries today, gentlemen. I'll be back tomorrow for more fun, and we will see you then. We can't wait to talk to you then. So have a good day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.